Thanks for that introduction, John. It's a pleasure to be here with everybody and to tell you a little bit about our company. Skeena is a precious metals explorer, developer that's focused in British Columbia, more specifically in the Golden Triangle, which is the northwestern portion. It's an area that's famous for high-grade discoveries. Probably the most famous is a discovery called Eskay Creek that had an average grade of, I think it was about 3.5 ounces of gold per ton of production, so ridiculously profitable mine. And it just so happens that our chairman of our company, Ron Netolitsky, was the CEO of the company that made that discovery. So we have an illustrious geologist at the helm leading our company in Ron. And I joined Skeena about 2 years ago. At that point, Skeena had been focused on base metals in South America. And Ron and I sat in a boardroom and said, well, we need to redirect Skeena, and let's spend some time thinking about investment strategy. One of Warren Buffett's rules, or 3 rules, is don't lose your investors' money is the first rule. The second one is don't lose your investors' money, and the third rule is don't lose your investors' money. So how do you apply that to mineral exploration, which is a tough business and highly risky? So Ron and I said, well, the first thing, let's focus on an area where we have edge, where we know a particular geography better than 99% of the other mining exploration teams in the world. There's no Australian company that's going to come to BC and outmaneuver us for properties and understanding of the geology. So that was one, focus on an area where we have edge. Second thing was let's be contrarian. We've just gone through a major downturn in the space, so let's take advantage, let's make that cyclical downturn our friend. Let's take advantage of it to go out and acquire properties that otherwise would never be available for acquisition. Third thing, let's try to pay almost nothing for what we buy. If you don't pay anything up front, you have a lot less chance of losing money. So we try to structure deals in a way where the payments are pushed out into the future, depending on us achieving a degree of success. And then the last component was, let's not try to go do grassroots exploration. Let's try to buy something where we already know there's something there, but because of our technological insights or expertise, we see a path to growing it and making it much bigger. So we're limiting our downside by buying something that's trying to get a hold of something that's already there. But then let's hit these things hard. Let's drill them. Let's put holes in here, because the only way to stumble into a major discovery is you got to take shots on goal. You got to go for it. So in the last 2 years, I think we've drilled more meters in British Columbia. I think we're top 3 or 4 company for drilling in the province. So we're not going to just sit on properties. We're going to push them aggressively forward. So far we've acquired 4 properties, and I'm going to tell you a little bit about each of these properties. They're Snip, Spectrum, GJ, and Porter, Idaho. So I'm going to start with, there's a little map. Shows you British Columbia, where we are, and our projects are all sort of clustered in an area that's already famous for other high-grade mines and discoveries. I mentioned Eskay Creek, but there's also Pretium is up there. Red Chris mine went into production about 1.5 years ago. So that gives you an idea where we are. I'm going to start by talking about Snip. So the Snip mine was also discovered by Ron Netolitsky back in the late 1980s. And it eventually ended up in Barrick's portfolio. But this is an asset that produced gold from 1991 to 99, and it produced at about 1 ounce of gold per ton. But in 91, the price of gold was $400, and by 99, it was down to about $260. So it was a difficult time period to be producing gold, and it was also, there wasn't very much infrastructure in the area, so it was a high-cost mine. And that was reflected in the cutoff grade that was used. Initially, it was 12-gram cutoff, and in the latter years of the mine, they were using a 20-gram cutoff, which is crazy high cutoff. So our whole thesis was, wow, the price of gold is much higher today. There's more roads that have been built. There's electricity there now. So we think if we could get a hold of this asset, we think you could apply a 5-gram cutoff, and then all that material that had been left behind by the previous operator could be economic today. So it was a pretty simple thesis of why we wanted to buy this asset. And we were able to structure a deal with Barrick 8 months ago where we paid upfront the equivalent of $150,000 of stock. So that gets back to the idea, I want to pay nothing. And we had a deal where we had to spend money to earn 100%, which we've done. Deal was we had to spend $2 million, we spent $3 million in August and September, because that's our philosophy, hit these things hard. So now we're just in a process of working with the province to transfer title over to us. So I'm going to show you just a short video. Let's see, hopefully this is, yep, there we go. So it gives you some context where we are. Again, there are all the other mines in the Golden Triangle that have made this area so famous. The white labels are 3 assets in this area. So we're going to zoom in. There's a road on the far right. That's Highway 37. That's infrastructure. There's a new power line that was built 2 years ago. So electricity, very important. It's going up to the Red Chris mine. It's now been extended down to the left to the McClymont hydro facility. It was built 2 years ago for $1 billion. That's 17 kilometers from Snip. So when I talk about suddenly a lower cost structure, that's what we have from that infrastructure. We also have the advantage of the previous operators drilled 280,000 meters of holes. So we have all of that assay data. We also have 8,000 meters of underground workings. So when you think about putting a mine back into production, instead of us having to pay to build that underground infrastructure, it's already there. We can take advantage of it. So it's right now we're going through all that historical assay data and compiling what's left. And the yellow vein sort of blobs there are the high-grade gold that's still left. It's averaging around 12 grams. So we're very excited about this. There's also an opportunity to extend the twin over to the twin vein over to Twin West, which wasn't really known about till the end of mining. So we think there's an opportunity to extend, to close that gap between the two. So an extremely exciting deposit or past mine that we think we can put back into production and hopefully make a lot of money. So once we transfer ownership over to Skeena from Barrick, we'll then be able to go underground this spring and start drilling year-round. So instead of being limited typically to a seasonal drill program in Northwest BC, we'll be going, like I said, year-round. So we did do some surface drilling this past summer. Here's an example of 3 of the holes we drilled. This was away from the structure that was mined in the past, sort of testing an idea, are there subparallel vein structures that are very similar to what was mined before? And we tagged into a very nice intercept here of 16 grams over 13 meters. It's a world-class kind of intercept. So there's lots of opportunity here to connect up new drill intercepts with historic intercepts. That intercept I just showed you was very close to this 61 grams over 5.8 meters. That was a historical intercept, is never mined. And so what we're doing right now is trying to put the pieces together and say where can we go in and find those areas that are left or find new areas and start mining. So this is a plain view looking above, and you see on the far right was our new intercept, and those are the historic intercepts. So we're taking the historical data and we're growing it. And that's what we'll continue to do over the next 2 years with this asset leading to a PEA. So this is back to the general area. The second project I'm going to talk about is called Spectrum GJ. We bought Spectrum from a prospector, and we picked up a GJ property from Teck. Again, we had a very good deal with Teck. It was basically everything pushed out into the future. We paid hardly anything for it. We did have to pay. We paid shares for Spectrum, and we were going after something high grade. In our sort of criteria of assets, we drilled it very aggressively, and unfortunately, it didn't hold up for a big high grade deposit. But the beauty of going after things where there's already something there is we're able to go, okay, wait, what can we do? We couldn't grow the high grade. What can we do with this asset? So we picked up GJ from Teck and we put them together, and now we have something that looks like 2 open pits that will work nicely as an open pit potential mine. And again, based on electricity nearby, roads nearby. So we'll have a PEA out on this particular project in about 6 weeks. So I think it will catch a lot of attention when this PEA comes out. We did an internal scoping study. Numbers look decent. I don't know what the numbers are on the PEA yet. We'll know in about 6 weeks. So an exciting milestone here for this particular project. The last project I'm going to talk about is a silver project we picked up about 4 months ago. We bought it from a Calgary oil and gas family that had owned this property since 1978. And it's a gem of a property. Lots of people have tried to get it over the years. And the stars sort of aligned with oil prices coming down and the particular family deciding they did want to vend it out. This is a property that is right next to the town of Stewart, so it's got good infrastructure. It has a historical resource of 13 million ounces, averaging about 27 ounces of silver per ton. Typical underground silver mines in Mexico are around 8 ounces. So this is very, very high grade. And the beautiful thing here is you got historical mining on 2 sides of a mountain. And our thesis is that the vein structure goes all the way through the mountain. So we're going to test that. If it does go completely through the mountain, we've got the potential for 150 million ounces of silver here. So an incredible gem of a project that's going to take exploration to determine what the potential is here. So those are our projects to date. Our market cap is around 45 million. We feel pretty underappreciated in the market. What CEO doesn't? But my hope is that these projects, as we move them forward, will garner more attention and more following, and start to see some appreciation in our stock price. So thank you very much for your time and attention.